Okay, so January 2024, the powers that be are telling us inflation's under control, yet things are really still expensive at the grocery store and the gas pump. Job numbers are all over the place, and there's a lot of talk about movement in interest rates. How is all that going to impact the housing market for 2024? Well, let's take a closer look. Hi, I'm Nick with the Iannitti Group. Just want to come at you with a real quick housing update here for January, maybe even more of a forecast, because this is kind of what I think is going to happen. We're probably looking at, basically the mortgage rate getting to somewhere in the 5%, at least the handle, that's the first number, being a 5. I think we might hit 5.5 million in total home sales. That includes new homes. I'll explain that here in just a bit. Right now, we're at like 3.8 million, so that's a big jump. And we're probably looking at a 5% approximate home price appreciation rate. So let's kind of dive into some of this, right? We're going to start off with the 5 being the handle number and mortgage rates. So right now, Dean Baker said it appears that mortgage rates are now falling again. They'll almost certainly not fall to pandemic lows, although they may soon be under the 6% mark, right? Lauren Chung said a marked turn can be expected as mortgage rates have plunged in recent weeks. I'm telling you, if mortgage rates get into the 5s, we're going to start to see a complete reacceleration of the housing market, okay? Keep in mind too, when we look, this is a study from FHFA, realize that, roughly 22% of all people have a mortgage rate right now below 3%, and almost, 36% of them are somewhere below 4%. These people are not likely to move. However, anybody with a 4 or above, they probably still are active, and we have seen that, okay? Keep in mind that if we can get rates from where they're at now, kind of these mid-6s down into the 5s, all of these people right here, the orange, the blue, and the green are definitely going to be activated. We might even see some of these other people that are probably not selling activated. In other words, we may see more inventory coming to the market, okay? This is Lance Lambert basically said that basically they're looking at the lock-in effect, okay? That's just it. Mortgage rates are at 6.8%, but right now, if you can lock in, you get a lower rate. So they're talking about this lock-in effect essentially is helping some people move up. Right. So basically the fact that they're looking at 3-4% mortgage rates aren't coming back anytime soon, they know, hey, if I can get into this 5%, it's probably a best case scenario. It's going to change a little bit of their calculus as far as if they're deciding to move. Okay. I thought this was really interesting too. This is from Bright MLS. Just realized Bright MLS is a really big MLS in the country, in the mid-Atlantic, right? And they basically did a survey of people, and it said that homeowners there who were selling weren't influenced by rates. It basically said 90% of them in the month of November were going to sell regardless of what rates did, okay? Also, same survey said that half of all buyers in November were going to buy regardless of interest rates, and 24% of them actually paid cash, okay? So that's interesting to see that we didn't, these rates didn't have such a huge effect on some of these people. Not everybody, take that with a grain of salt, because the same study also asked the top 3 reasons why buyers basically paused in their decision, towards the end of last year. 72% said it was mortgage rates. The other one was inventory. If mortgage rates can come down to 5%, inventory is going to go up. So both of these 2 bigger hurdles could be solved, okay? So Goldman Sachs basically right now, they're saying that they're forecasting 3 consecutive 25 basis point cuts in March, May, and June. We're not quite sure if that's going to happen. We're waiting on a new jobs number coming out today, so we'll see where that's at. And we've had a lot of this persistent, kind of good job numbers. Yet again, when you go and buy milk and eggs and gas, people are still feeling the squeeze. So I think that's definitely still a real thing. But we also know too, when we look at the 30-year mortgage rate versus the 10-year treasury yield, over the past 50 years, they have very much moved in unison, and the average spread is about 1.72. Right now, our current spread's about 2.78. We're probably not going to get to this 1.72 again, but if we can get around like 2%, 2.1 or something, that definitely puts the rates back in the 5s, okay? So 5.5 million in total home sales. Like I said, if we can get these lower rates, we're going to see more people willing to actually move. That's going to definitely increase the inventory. The other thing, though, is new construction. Okay, thought this was incredibly interesting. Basically, they, due to the market basically requiring higher level of sales, and our pre-existing inventory was incredibly low. We actually saw that new homes available for sale accounted for 31% of total home sales, right, in November. realize that's almost 3 times the historical average. So we're definitely going to see more new construction out there. Keep in mind too that a lot of these builders are motivated to maybe buy down an interest rate. So that is absolutely an opportunity for, say, someone who's going to be downsizing to go in and buy a new home, a smaller, 3-bedroom, 2-bath, smaller home, and have the builder potentially buy that rate to maybe somewhere down in the 4s, and then allow them to sell their current home. We absolutely may see more volume coming here as the year goes on, definitely mid-year and towards the end of the year. Okay. When we talk about 5% being the approximate home price appreciation rate, when we look at home prices, remember, this is the 49-year average monthly price movement, right? It's basically kind of seasonality graphed out. When we look at 2023, towards the end of the year there, right here, we're seeing that things basically, what this is things are returning to normal. Okay, we are experiencing what's called a return to mean, right? When we look at or return to median, when we look at home prices right now. You've heard a lot about this in recent headlines and stuff. Just keep in mind, a lot of people think, oh, if we're going to have a return to the median price, we had such incredible growth through the unicorn years, through the pandemic, that now we're going to have homes go low. The prices are going to have to dip in order to kind of for that to stand true. That's not actually the case. That's not the definition of returning to median. We're going to return to the median and probably see some normal price appreciation over the next 3 or 4 years. Okay. When we look, here's a bunch of different, MBNA, Fannie Mae, Goldman Sachs, NAR, Zillow, Realtor.com. When we look at the average, they're talking about 1.5% of appreciation here for 2024. But I've always preferred the home price expectation survey. This is Fannie Mae's survey. They put it in partnership with Pulsenomics. They poll over 100 housing experts, and they talk about, changes over the next 5 years. So they're looking somewhere around like this. I think this 2024 number is a little bit low. Okay. But when you look over the next 5 years, they're talking about somewhere around a 3 to 4% increase, right? Which is pretty much historically what we're looking at. Keep in mind, on a $400,000 purchase, if we had just a 3% increase over the next 5 years, that's still $72,000, right? That's almost a 18% return on your money. So still pretty good. When we look at percentage of change in home values month over month, is this Case-Shiller and FHFA. Again, kind of seasonality mapped out here, right? These are Freddie Mac prices, but this I thought was incredibly interesting. Okay, Selma Happ from CoreLogic basically said home price gains in the S&P Case-Shiller index have increased by about 7% since the beginning of the year, and are 1% higher than the peak in 2022. Okay, so remember, like mid 2022, there is when rates really started to explode, right? And everybody kind of realized that the mortgage party was over, and things just, the market really kind of took a little bit of a correction there. Realize now we have recovered all of that loss from 2022 going forward. Okay, it looks like this, and what we're actually getting to here is when we look at, basically over a past 42-year average, we're getting back to where the average is going to be. This is absolutely really what we want to actually see. Okay, Selma Happ again, with mortgage rates dropping, demand for homes in early 2024 is likely to be strong and will again put pressure back on prices, similar to the trends observed in 2023. Okay, most markets. Keep in mind, this isn't every market. These are nationwide numbers. I understand if you're in a place like Boise, Idaho, or Tampa, some place where you were seeing appreciation of 28% a year for 3 years, and now you're down 8%. Okay, well, we kind of get that, right? You're still up in the grand scheme of things. Just realize this is basically an overarching thing that covers all of the nation. So there are going to be some specific, kind of micro markets where necessarily doesn't really apply. So anyway, that's it. If you have questions about these numbers, what's going on in your neck of the woods, what's your homework, good time to sell or buy or whatever, just reach out. I'm more than happy to have that conversation with you. Also keep an eye out. I'll do a deep dive into the San Diego market and Sarasota housing markets as well. And that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.